Okay, it's time now for our next conversation, transforming legacy, multi-generational wealth management. So without further ado, let me welcome on board Abhimanyu Munjal, the Managing Director and CEO at Hero FinCorp. Abhimanyu, of course, is the third-gen entrepreneur who has been at both the ends of course, inheriting a legacy as well as making sure that it's growing sustainably from here on as well. Hi, Abhimanyu. Thanks so much for being here with us at IGF. So, we're talking about wealth, but before that, let me zoom out and ask you a basic question. What does wealth mean to you? And I ask you that because at different point of times, wealth means different things, right? At some point of time, it's only about comfort living. It grows to, let's say, some materialistic aspirations and perhaps making a difference to the society by the end of it. How's been your and your family's relationship with wealth, and how do you make sure that the wealth management stays agile and nimble enough to make sure it's reaching up to the changing needs?
Yeah, so I think wealth is evolving, right? And it's something, of course, the topic that we are talking about and my fellow panelists who come in are better placed because they are practitioners. I'm just a consumer, right, of wealth management. But, the wealth is evolving. I remember the times growing up, we used to only hear gold, real estate, fixed deposits. Today, I don't hear any of those. Yeah. Today, I hear crypto, tech companies, NFTs, equities, FNOs. So it's really, really evolving. But the underlying commonality, which we all should not forget, is preservation. Yeah. Right? At that time, we thought that gold as an asset class or fixed deposit as asset class was actually the best asset class to preserve. Today, we want to use more interactive asset classes. And including me, the next third generation entrepreneur, we like asset classes like art. We like asset classes like wine. We interact with it. So we buy stuff as an asset class to preserve wealth, but not only to keep it in a bank, but to see it, to live it, to interact. Having said that, there's a fine line between interaction and burning, right? Because sometimes people get confused and they say, yaar, ye to asset class acha hai. This is a good asset class, but they don't realize that they're just consuming rather than preservation. So for us, for me personally and for the family, of course, all our wealth is in building institutions. Over the last 70 years, when my grandfather started the business, we've been building this institution. We have, which is the Hero brand, Hero Group. We have not sold a single business because we are not a private equity investor. We are creating a legacy for future and really giving upward mobility to India. And as a Munjal family member, if I wear that hat, all of us are just focused on that, and that's creating wealth for us. While investing is something we do as personal for having fun and doing some interactive stuff, but for us, wealth is really building an institution that we can be really proud of in coming years. Okay, so wealth creation, preservation, and not really depletion. That's what you need to watch out for. Yeah, the burning of the wealth or cash. But that gets me to the next question. A lot of families struggle when it comes to the emotional aspect of succession planning. And what I mean by that is, in a family, you have different people with different aspirations, different, expectation of return, risk, and all of that. And you have, of course, an older generation, which is more into traditional assets and preservation, as you talked about, and a bit more aggressive stance that you see with a lot of the young peers. How do you bridge the gap? It's a very relevant question. It's very important. I have this phrase that I talk about with my team and family. To grow, you have to let go, right? I mean, you have to empower to grow. So I think it's extremely important to set aside some risk capital, right? And let your multi-generational families, the new generations, follow their passion, right? Let them follow the passion to say, hey, work is passion, and okay, if you like collecting art, or if you like playing video games and want to invest in video games, go ahead and do it, right? Because you can't force people to just come into a business because generations have been doing it. In our family, we give that independence. We give that independence which helps us not to step on each other's toes, right? We are a very large family, and I started Hero FinCorp, which is a financing arm, by myself, and I have no one in the family involved. I have them as my family board. I can go talk to once in 3-4 months. I get the access to brand, I get access to capital, but they just threw me in the deep. Go swim, learn, right? And that's how we do. And if you notice in our family, you will not see two family members in any of the same business.
Makes
so
sense.
It really helps from, getting rid of these egos or competition, because it's ought to happen. So my advice, at least being a practitioner, would be let the new generation follow their dreams, follow their passion. Don't force them, and try and separate as much as you can. Because if you have everyone together, it's a cliche saying that too many cooks spoil the broth, and that's ought to happen.
No, fair enough, but let me now welcome the rest of the professionals on board as well to help us kind of deep dive a bit more into that. We have, of course, Rohit Sarin, the co-founder, Client Associates Private Wealth Management, Ismael Hajjar, the partner from PwC Middle East, and Mahesh Kumar, the co-founder at Farro Capital, joining us right now. Hi, gentlemen. Thanks so much for being here.
Hello. Hey.
So I just want to extend that point that, Abhimanyu was talking about, that at least in this case, they have it very clearly kind of earmarked as to two people are in the same business, but not a lot of families would have that, kind of leeway with the sizes, etc. Mahesh, come in on this one. How are wealthy Indian families looking at wealth transition into the newer generations and balancing the two acts as I was talking with Abhimanyu about earlier?
Yeah, so I think that's such an important sort of topic today, especially in a world where you're seeing, we are expecting a transition of around $80 trillion from one generation to another generation in the next 20 years, right? And then you see some of the iconic families around the world, but even in India, right? You see, for example, the Munjal family, right? We're all, it shows that this is such an important issue. And then for a family, the idea is, what are the structures and strategies that you put in place to allow for this transition seamlessly? And it's a very complicated and big topic, right? And there's so many things that come into play. So one is, of course, when it comes, so with all these families, the idea is that how do you generate wealth? Typically, families have generated wealth by taking a very concentrated bet in like one business or one industry. And then the idea is that, you have an exit or you take profits out, and then you're looking at how to preserve the wealth, how to grow the wealth, and how to transition it to the next generation, right? And today, you see a lot of families in India, they are really thinking global, right? So, and the good thing is today, there are so many legal avenues to take money out of India. Contrast this with China. It's really difficult for a wealthy Chinese family, it does not matter who you are, to take wealth out. There are no routes available. But in India, there are so many ways, without RBI approval, with RBI approval, and very sizable wealth can be taken out of India. Now, why are these families taking wealth out, right? And again, because you may think that, oh, India is doing so well, so why don't we all be 100% invested into India, right? No, so diversification essentially is the essence of risk management. It's all about risk management. Right? So whenever you think, even in terms of long-term transition, of building long-term legacies, it's all about how do you manage risk as a family, right? So, as an Indian family, the idea behind having this wealth overseas, outside India, is to ensure that there is this wealth, a pool of assets outside, legally set up, in the right structures, ideally where you're perhaps not paying tax or you're deferring tax, and you're able to pass that on to the next generation, not be subject to all the depreciation of Indian currency, right? And that is what creates all the sort of foundation and framework for this transition, right? And then, of course, it's a complicated topic. There's so many other aspects to it,
Yeah, no, but one of the basic questions that comes to it, Ismael, is the fact, when do you start the succession planning and estate planning? Is there a critical mass to it? Is there a specific stage that you should start looking at doing that?
Well, honestly, every good advisor should tell you start yesterday, right? Because no business owner Well, generally business owners or wealth owners are very focused on building the wealth, right? Building the business, and everything else is, a detail, right? If succession planning doesn't start early enough, it can become a very expensive detail, right? Or very, very expensive oversight. Expensive financially, but also expensive in terms of, destroying the family harmony and the family unity. So typically, if you were to try to identify, what that homework looks like, right? You would typically split it up into three, and I obviously oversimplify here. The first homework to do is to understand how to own the wealth, right? So how to own the assets, whether those assets are in India or in any jurisdiction around the world, and typically the jurisdiction where the assets are located is going to drive part of the answer in terms of how it should be owned. But equally, the jurisdiction of tax residence, right, of the owners, and sometimes their nationality is also going to drive part of the solution. The second homework to be done are the rules, right? What we call the governance, right? So how do you want basically this wealth ultimately to be managed, right? What values do you want ultimately to instill in the next generation, right? For them to treat the business, to treat the wealth in a certain way, and super important, what happens in case there are conflict, what happens, in case of contingencies, and we all know that life is cyclical. Right? And so the third one is, what sort of support do you need and how to structure that support. And more families want to have someone on their side, and that's why we're living now in the middle of the rise of the family office era.
Sure. And family office era is definitely rising because of the, kind of needs you talked about. But here, let me break it down, Rohit, and I want your help here to understand at what stage, what type of advisor is needed? And I ask you that because you start off, of course, with a wealth manager or a registered investment advisor. When do you move to, let's say, a multi-family office or a single family office? I know there's a science to it or a earmark number, but what's the advice you can give there?
Well, that's a very good question, Anisha, that you asked. So India, I presume you asked this in the context of India. So India wealth is still growing. It's going through a massive wealth creation phase. So different stages is, when your wealth is, in the Indian context is about 100 crores, which is roughly about 10 to 12 million dollars. Up to that, I think engaging with individual wealth managers is okay. When your wealth actually grows beyond that, then that's the time you need to have somebody who as your long-term partner on your side, who is actually sitting on the same side of the table as you're sitting. So somebody like a multi-family office. So something like, upwards of journey beyond $10 million. The time when it comes to set up your own single family offices, my take is that it should be about at least an asset of $250 million, which in Indian context is about 2,000 odd crores. Like whatever limited exposure which I have towards developed markets, I haven't seen a single family office in developed markets less than $500 million, 500 million. The reason for that is, when you're setting up a family office, it's a specialized domain. First of all, you need a chief investment officer.
Yes.
Right? And with that scale of wealth, you'll need a CIO with at least 20 years of experience and not less than that. I would prefer 25. Now, this CIO will then also come with his asset class specialist, somebody who needs to specialize in private markets, somebody who specializes in public markets because the amount involved is large enough. Then you need a chief technology officer because, technology, as we saw in one of the previous sessions, it's an interplay between tech and data. It's very important because you cannot simply run a family office without technology. And third is compliance.
Yeah.
The world of finance, particularly investments, is very, very much, driven and controlled by the regulators. So you have to be on the same side, right side of the law. So a chief compliance officer and operations officer who executes in sync with the wealth. So I think it's a complete platform and a setup to run an effective family office. You need at least $250 million. Even a multi-family office less than that will not be able to build a platform which clients would like to engage, less than that. So that's my take, that up to 10 million work with wealth managers, 10 million to 250 million work with a multi-family office. More than that, it's time for you to consider setting up your own team.
Okay, and that's what Abhimanyu has done there. But I just want to come back to the point, Ismael, that even Mahesh was making, and that's about global diversification. Since we are in UAE, talk to me about what kind of platforms does UAE offer? What are the tools available for the families here? Because we're seeing this increased trend of a lot of family offices moving into UAE as well.
Yeah, and this trend is not India specific.
Yeah.
Right? It's really a global trend. We see the UAE rising and climbing the ladder, frankly, of the most attractive jurisdiction for wealth, right? Generally, and there are a few reasons I want to insist on. So, when it comes to the attractiveness of a jurisdiction and what you refer to as global mobility, I think that the first thing to look at is, a jurisdiction where the family feels comfortable spending, let's say, 3 months, 3-4 months a year. I work with over 200 families in the region, and a number of them are Indian or Indian connected, and none of them spend the entire year in one jurisdiction, right? And I can tell you it's not an Indian thing. Most of the global elite, they are splitting their time across multiple jurisdictions. So it's not about competing to be the exclusive jurisdiction, it's about competing for the 3-4 months. And what UAE has done is basically come up with tax residence criteria that basically mirrors what the market wants. So essentially with 3 months on the ground and several other criteria, families can become tax resident here. Another thing that's super important is basically the availability of family office. We mentioned family office already, of family office regulations and family office tax incentives, right? Tax is still, I would say, fairly new in the UAE, but it's there for, at least for corporation, right? The corporate tax. And, they've understood the necessity of having state-of-the-art family office regulations and tax incentive. In fact, the UAE is the only country in the world where you have 4 single family office licenses in ADGM, DWTC, DMCC, and the IFC, right? So that says it all. And then lastly, you need to have the structures, right? And the structures, I don't mean family office, which is the support center for the family, but I mean the legal and tax structure to actually own the wealth, right? Be it the wealth in the region, the wealth in India, the wealth, in the rest of the world. And we see very much diversification in those structures, meaning that families don't feel comfortable locating all those structures in one spot, but we see now more and more UAE competing with, I would say, legacy financial centers to take, I would say, a decent market share in the new structures or new wealth ownership structures being created.
Fair enough, and for a reason that is, right? Of course, increasing the market share. But I just wanted to switch gears and Rohit, ask you about this and call it the feminist in me coming to the fore. But and correct me if I'm wrong, but I do feel that women do not play enough part when it comes to wealth planning. Would I be correct in saying that?
Yes and no. So first of all, the very fact that you are sitting here, that's a sign that the times are changing in India. You are talking to us, you are anchoring this conversation.
I think it'll change when I actually become that wealthy enough that I get to hire you.
No, what I meant to say is that young women in India are the forefront of the wealth creation. You are there, you are a living example of that. Now, what I get to see in the families is that, in India, there are 2 sets of, examples which come women in families. So one, where women have gone out, educated themselves, higher education, they are now economically active. So there is the largest hospital chain in India, which is now set up by the patriarch, has got 4 daughters. They pretty much run the whole operation, and very well. It's a very respectable operation. Then I've also come across women who now lead their large families, family offices, women who are leading it.
Yeah.
Now, the second segment is women who are not economically active in families. These are business families, and Abhimanyu sitting with me, he'll comes from a large family, he'll relate with that. Now, as India is getting richer, and another trend which is growing in India is from a joint family system to a nuclearization of the family. Still, if the family wealth is owned jointly, so there is a concern amongst this segment of women that tomorrow when my part of the family member is no more around, then how do I continue to unlock wealth from the jointly held system and continue to protect my lifestyle? And I think that anxiety is being addressed by the families, progressive families, and they are integrating the thought process of these women in actually bringing them into the forefront and giving them exposure onto the financial management. So, and I see this change happening not just in Delhi, Bombay, Bangalore, but in Jaipur and Ahmedabad, which are even more jointly held in traditional thought processes. They are letting their women actually come forward and take active participation in the management of wealth.
Fair. But the other change that we are witnessing is this need of not only having wealth for themselves, but creating wealth for others as well. And that's where, Mahesh, I want to come in and ask you about responsible investing, because, families no longer just want to hoard their wealth. They want to make sure that they are participating in nation building, and they're not just giving away money in just donations. They're looking at creating endowment funds and creating a sustainable way of doing that. How are you helping families and, guiding them to do that?
Sure. So we are seeing our clients approach this in various ways, right? So on one end of the spectrum, we have some clients who have contributed billions of dollars, right, of their wealth to endowment. We have some families who have contributed literally almost 100% of the wealth for endowment, and you'll never hear about that. Because it's part of the policy, not for no one to know about.
Is going to be right after you.
We'll have to be they're closing
3:49.
They are custodians of wealth not only for next generations,
5 and 3.
but it is for humanity. Yeah. Right? So we've seen some clients take very strong sort of positions on that. And our role as family office has been to help them.
But he's always in time and very sharp.
For that, of course, working with people like Ismael, Hajjar, and advisors around the world, and also creating investment strategies that can back that kind of an endowment. Because when you're creating such sizable endowments, you need to generate that kind of cash flows on a long-term basis. You need to, you can't be thinking short-term basis. You need to be able to ride all sorts of market cycles and ensure that you always have cash flows to meet all of these the charitable grants, right? All of the expectations. So you have that, and at the same time, we see some other very interesting scenarios where you have family, first generation. They've created wealth in an industry which is technically polluting or something, right? And then you see the next generation, very international, very savvy, and they're looking at, okay, as a family, we have built up so much know-how in this one industry and built all these relationships. What can we do next? So now the next generation is driving a whole VCP strategy focused on disruptive innovations in the same industry and looking at technologies that are reducing emissions or the carbon footprint in that industry.
Right.
They're making a lot of money. It's not just pure charity. There is a huge investment thesis when it comes to sustainability. You just look at today some of the themes like EV or renewable energy. They're massive businesses, right? So much, and so you see that trend where when families start thinking the next level, right? It's of course there is always investment returns, but then there is this whole thing about impact. But also for some families, how do you sort of bring that into the institution of the family office, right? As part of the investment strategy. Some of these families, they draft these things called investment policy statements. Very elaborate documents talking about all of the constraints and processes and discipline and everything on how the family office will think about investments, so that these are things that can pass on from one generation to another. Right. So that's right. So from our experience, and again, our client base is very international. Of course, a lot of Indian clients, but we have clients all the way from the US to Japan. We see this constant theme across all of them, right? So they're all sort of approaching this in this manner.
I think the takeaway is impact investing is what everyone is looking at. But with that, we'll have to wrap up this conversation. Thanks so much, gentlemen, for being a part of this. Thanks so much.
Thank you very much.